The biggest mistake you can make in 2026 is you and buying a home buying a home in the wrong city. For years, we've been told California real estate is a sure bet, that prices only go up. But that myth is starting to crack. Right now, prices in certain areas are softening, inventory is piling up, and the affordability crisis is forcing people to rethink where they live. So, today, we're not going to spread fear. We're going to use data to identify 6 California cities where home prices are falling, so you don't overpay in a weakening market. Let's dive in. Kicking off our list at number 6 is Clear Lake. You might see the affordable price tag and think it's a bargain, but that's a trap. Median home values here are down over 5% year over year, and in some specific neighborhoods, we're seeing drops of 15 to 20%. Homes are sitting on the market longer, and inventory is growing. This isn't just a slight cooling, it's a sign of deeper economic weakness. Rent growth isn't keeping up with these falling values, which means if you're an investor, your cash flow is getting squeezed hard. The key takeaway here is that cheap doesn't always mean safe. When you combine declining prices with weak demand, you get a high-risk situation. Don't let a low sticker price fool you into buying a depreciating asset. Coming in at number 5 is the coastal city of Eureka. Known for its scenic beauty, even this lifestyle market isn't immune to a correction. Median sale prices have dropped about 5.7% compared to last year. Homes are now sitting on the market for over 60 days, and sellers are having to accept offers below their asking price more and more often. So, what's going on? Eureka's remote location limits job opportunities, which is a major problem. We're also seeing an outmigration of younger buyers who need to be closer to economic hubs. On top of that, the rising costs of homeowners insurance and general upkeep is eating into any perceived affordability. It's a harsh reminder that even in beautiful coastal towns, if the demand from buyers dries up, prices will fall. A pretty view can prop up a weak market forever. Next up at number 4, we have Ukiah. This inland city is facing some serious headwinds. Forecasts are predicting a potential price decline of 7 to 8% by 2026. The data backs this up. Inventory is rising much faster than buyer demand can absorb it, and sellers are increasingly being forced to cut their prices to get a deal done. The risk signals are flashing red. Local job growth is slowing down, and wages simply have kept pace with the massive price gains we saw over the past few years. And like many other parts of California, the increasing fire risk and soaring insurance costs are a huge blow to affordability. The lesson from Ukiah is that these smaller, inland markets can correct much harder and faster than people expect. The boom was quick, and the bust could be just as swift. At number 3, we have a city that might surprise you. Sacramento. For years, it was the go-to destination for people fleeing the Bay Area's high prices. But that trend has hit a wall. Prices in Sacramento are projected to fall around 3.3%. Homes are taking longer to sell, and price reductions are becoming standard practice. The pandemic-fueled demand that drove prices sky high has officially peaked. The city is now facing its own affordability crisis. It's become too expensive even for the people who once saw it as a refuge. We're also seeing rental growth flatten out, while vacancy rates are on the rise. This tells us the overall demand for housing is weakening. Sacramento's story proves that even a so-called recession-resistant government town isn't correction-proof. When the fundamentals no longer support the prices, something has to give. Our runner-up, at number 2, is Stockton. This Central Valley city saw a massive surge during the pandemic as buyers chased affordability. But that momentum is fading fast. Projections show a potential 4.1% drop in home values by 2026. The number of homes for sale is up, and it's taking over 50 days to sell them. The core problem is simple. Local wages are lagging way behind housing costs. It's the classic affordability trap. People bought in thinking it was cheap. But now, rising insurance, property taxes, and maintenance costs are stretching budgets to the breaking point. Meanwhile, rent growth is stalling out, which is another bad sign for the housing market's health. Stockton is a perfect example of how affordability myths can trap buyers. When a market's prices are built on outside demand rather than strong local economics, it becomes incredibly vulnerable when that demand disappears. And the number 1 California city where home prices are declining is San Francisco. San Francisco. I know for decades it was the king of real estate, but prestige doesn't protect you from math. Forecasts are calling for price declines between 2.5 and 5%. In fact, nearly 80% of homes in San Francisco have already lost value year. The buyer pool is shrinking fast. $1,000,000+ price tags, colliding with high interest rates, have made homeownership an impossible dream for most. The city continues to see negative domestic migration, meaning more people are leaving than moving in. And just like everywhere else, soaring insurance and ownership costs are adding fuel to the fire. A small percentage drop here translates into massive dollar losses. A 5% drop on a $1.5 million home is a $75,000 loss. San Francisco is the ultimate proof that no market is untouchable. So what's the big takeaway from all this? 2026 is not about timing the market perfectly. It's about strategy, patience, and data. Do not get caught up in the frenzy of chasing a deal in a market that is clearly softening. Instead, do your homework. Research the local trends in the specific neighborhood you're interested in. Evaluate your true affordability, including taxes, insurance, and maintenance. And always focus on the long-term fundamentals: job growth, wage growth, and population trends. Those are the things that create real, sustainable value. Thanks for watching. If you want more data-driven insights to help you navigate this tricky real estate market, make sure to like and subscribe. And let me know in the comments, which city on this list surprised you the most? Share this video with anyone you know who's thinking about buying a home in California. See you next time.